Well, I was expecting that maybe this week would finally be the week that available inventory of homes for sale starts rising across the country for the spring buying season. But no, inventory fell again. It's now 10 weeks later in the season from the moment when inventory usually starts climbing. So normally by mid-April, inventory has climbed by 5 or 10% over the beginning of the year. This year, inventory has declined by 17% since January 1. This is a massive rebound in the housing market conditions since last year. And home prices have stopped declines that we measured at the time. Every week, of course, Altos Research tracks every home for sale in the country. We analyze all the pricing, the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. The data we cover here in these videos is national in scope, but it is available from Altos for every zip code in the US. If you need to communicate with your buyers and sellers right now, they are probably misinformed about what's happening in this market. So they need you to help them. There's a link in the description below to join us at Altos. I'm Mike Simonsen. I'm the founder of Altos Research, and it's mid-April, second quarter, prime home buying and selling season. But let's look at the data right now. We have a supply-constrained market. In most of the country, inventory levels are back down to the pandemic lows. And this is because there are very few people interested in selling homes they already own. This week, there were only 66,000 new listings of single-family homes, and about 25% of those are already in contract. This week, last year, there were 100,000 new listings, and 30% of those went into contract immediately. So yes, demand is lighter than last year, of course. That was insane times last year. But the quantity demanded now exceeds the quantity supplied. And 25% immediate sales is still a lot. 25% of those homes that got listed last week and went into contract within a few days. This shows us that while demand is lighter than last year, there are still plenty of buyers competing for the limited supply of homes that are on the market now. In this chart, we have weekly new listings volume, and you can see the spigot just got turned off after July 4th last year. The seller volume dropped and has not recovered in that time. You can also see how in normal times, sellers are ramping up each week in the spring. And at the right end of the chart now, you can see that's just not happening this spring. You can imagine three groups of potential sellers that are holding back. The first group would be the life event movers. I'm moving up or I'm moving down. We know that fewer people are moving. We're staying in our homes longer. And this group is the mortgage lock-in group. It's hard to change from a 2.8% mortgage to a 6% mortgage, so I don't move. But also, even if I have to move, for example, my brother is moving from DC to Pennsylvania to take care of his in-laws. They'll buy in Pennsylvania, but they're going to keep that ultra cheap mortgage and the home they own in DC. As a result, less inventory. The second group of potential sellers are the investors. Investors have purchased millions of homes in the US across the country in the last decade. We can observe that the biggest investors, like the big institutional Wall Street money, has dramatically slowed purchasing, but none of them are selling. There is no discernible inventory coming from investors at this time. The third source of potential inventory would be from distressed homeowners. You lose your job, your income doesn't keep up with inflation, other economic stress, like you might be forced to sell your home. This group was the source of inventory in the 2008 crisis. But as of right now, the US still has record employment, near record employment, and even the big layoffs in the tech sector are generally finding work quickly. So as of now, none of these people are selling homes either, essentially none. Every week we see that homeowners have a really good deal and they know that they have a really good deal. And so we will have to live in this low supply market until something dramatically changes. There are now just 405,000 single-family homes on the market across the country. That's 57% fewer homes than last year at this time, or 57% more homes than last year at this time. But every week that the difference is compressing. It was 75% a few weeks ago. So I think it's wild to think, but as this chart illustrates, if the trend continues, the trajectory continues, we could be back at record few homes on the market by the third quarter. I don't think that's going to happen. Like, I continue to expect that inventory builds somewhat, at least somewhat, and starting soon. And especially if the economy slows notably later in the year, I'd expect inventory to climb yet. But it could continue down and get us into record low inventory again. But the fact is, most home buying happens really before June 30th. There's a peak, and we're rapidly approaching that peak for the year. Inventory usually climbs for 20 weeks starting in February through June, and we're halfway through that seasonal cycle, and yet inventory is still falling. So now these dynamics have not resulted in prices rising, but they have stopped prices from falling. Supply is tight, but affordability still restricts demand compared with last year at this time. There may be just a few markets where prices are still moving down. For example, home prices in the city of San Francisco proper do not have appeared to stop declining yet. Tech job losses, remote work, the unaffordability of the city are driving so much. But the Bay Area in general, it's 8 million people in 5 counties, is much more diverse and has stabilized from last year. The median price of single-family homes in the U.S. is $439,900 this week. That's unchanged from last week, and it's still a fraction higher than last year at this time. The other two of three Altos price measures are lower than last year at this time, after the declines of the second half of 2022. So what's happening is that last spring prices were jumping each week, and prices corrected down just as quickly in the second half of last year. Now they're inching up, but the year-over-year comparisons get more negative each week. So the median price of the new listings is a couple percent lower than last year at this time. The median price of the new listings is now $399,900. That's down a tick from last week. And in the chart, you can see how the spread between the light and the dark lines is staying wide this year. Last year, due to that insatiable demand, prices of the new listings were still jumping each week. So the price of the new listings is a little noisy and will jump around a bit from week to week. But in general, the price comparisons with last year will continue to get worse until probably July or so. It's shown about a 0 to negative 5% price decline from last year. A third way to look at home prices are with the homes in contract. These are the pendings, the sales that will complete in the future. The median price of the pendings ticked up this week to $379,000. That's also lower than last year at this time. So these are the homes that are currently under contract, for which the sales will happen in April, May, June. And just remember that the buyer demand that we see now in the data doesn't show up in the headlines, the sales headlines, until like July or August after these sales complete. So the headlines we hear now reflect the buyer demand back from November, December, January. The seasonal peak of prices is in June. And like the other price indicators, you can expect that the pendings price year-over-year comparison will get worse until July, and it's going to be a few percent lower than last year. You can see the light colored line in this chart was the pendings for each week last year, the price of the pendings each week last year, and it was rising significantly. The prices this year, that's the dark red line, have been below or at or below prices last year since mid-February. And since last year had the bidding wars, overbidding, the sales prices came in higher than this. So we can see that home sales prices are a few percent lower than last year at this time. And we can also see that the headlines are going to report negative home price change for several more months, even though the pending prices are actually ticking up right now. So we have the demand that we can see right now, but we won't see that data in the traditional headlines until much later in the year. And the headlines we see now are from the ice cold end of last year. So this is because, price corrections happened in the second half of last year. And what we can see now is that the demand is currently higher than the available supply. So fewer homes are taking a price cut each week. 29.8% of the single-family homes on the market have taken a price cut right now. And that's a fraction fewer than last week. And it's going to be fascinating to see if this indicator continues it to improve and does it surpass the 2019 levels in the next few weeks. The dark red line here, will it go below the blue line in the coming weeks? So a few weeks ago, Redfin released a report that home sales completed in February had the most price cuts on record in their data. And that highlights an interesting nuance, the difference between the two data sets. In this chart, we're watching the active market. 29% of the homes on the market now have had a price cut. The Redfin report was measuring the sales that closed in February, and homes that were on the market and cut their prices in November and December to get offers, those sales closed in February. And you can see the peak of this chart, price cuts, is in November, late November and December last year. That's the light red line here. So what we know now, what we also know now is that when Redfin releases the same report for March sales, price reductions will be fewer. April sales will be fewer still. So you can see all the way, at least until June, which is data we'll see in July, already in the data of how the market conditions have improved dramatically this spring. So the takeaway here is this. We can already see the price strength in home sales all the way through midsummer at least. So if you have a hypothesis that home prices are falling in 2023, that's a trend that can't even start until the third quarter at the earliest. So keep that in mind. Home prices for 2023 are not showing any sign of further decline. It all happened in 2022. Maybe that changes later in the year, but there's no sign of it yet. I did a great podcast with Redfin's Taylor Marr a couple of weeks ago, and we talk about these price reductions and how you measure it differently. So look for the Altos Top of Mind podcast, wherever you get your podcasts, if you haven't seen it already. It's also on the Altos blog. If you need to know what's happening in your local market, as it happens, go to altosresearch.com and book a free consult with our team. We'll help you interpret this crazy market for your clients right now. This is a critical time to be properly informed, and many people have the wrong impression. So please join us.